Hello, this is Jason Wenkin. Thank you for checking out today's market update. I am taking a look at a chart we've used an awful lot here in the past couple of years on my blog. I kind of took a screenshot of this and blew it up, so it looks a little grainy, but I did that so I could draw a couple of sort of what I'd call future lines on this chart, kind of what I think is going to end up happening. So today is Monday, August 19. Markets closed, finished down today about 0.6%, and this marks the 11th out of 13 days that the market has declined, including 4 in a row. And that's the first time, I believe, since, I want to say, late 2012 that the market's declined 4 consecutive trading days. So it's been a while since we've seen sort of the type of decline that we've seen in the last week or two. The market is still close to its all-time highs, and stocks are really the only asset class, U.S. stocks in particular, that have held up in 2013. Though now that they're off their highs, their returns are not where they were. They're still up double digits, whereas, again, there's not another asset class anywhere. International stocks, real estate, commodities, bonds, everything else is either only up single digits or down, in some cases, single digits or double digits. So I wrote a recent blog post talking about how this isn't nearly as good a year as many people think it is. Just because the Dow and the S&P is up doesn't mean that everything's up. In fact, more things are negative than there are positive when we look at all the different asset classes someone might have in a diversified portfolio. But either way, here's what's happening in the stock markets. This is the S&P 500 daily chart. Each bar represents a day. And I drew in a pattern that I think is got at least a decent chance here. I'd say actually a pretty good chance of happening based on the metrics that we study. Since the market fell out of its upward channel and broke through the bottom and then came up, sort of challenged getting back into that zone before retreating. It hasn't yet sort of developed a new upward channel. And what I think is going to happen is a pattern that it closely resembles what one would call a head and shoulders. It's basically where you have a previous peak. It's kind of like what we would see over here. I'll find a color that's kind of different. So you have a peak like this one over here. And then you have a base or a bottom, as you call it, followed by another peak that ends up becoming a high. And I think what we're going to go down is we're going to set a higher low than the previous low. So the previous low is over here, and it's going to be higher. But then I think that the low, the next peak, is going to be lower. And from there, the most likely scenario is going down all the way until we get to a long-term support level. Now, the reason I think this is really a couple reasons. One is we can see that the market's volume as it's risen has declined. I already drew this kind of purple line, but I'll draw this in again. This is the volume, and you can see that the trend has been down, meaning that the rally has been predominantly because of smaller investors, not larger investors. And that's very common in the late stages of a bull market. You get a lot of investors who want to pile in because they see all of the big returns that have been made in the rearview mirror. And then only after they jump in, the market starts to decline. It does that on a slightly higher volume, which we can see here. The last couple of days, the volume has been higher than it was those last days that it was going up. And so that's usually a sign that, again, there's not institutional backing behind the rally. That's, again, very commonplace in a market peak. We also have two different types of what market technicians call negative divergence. It's essentially when your things like relative strength, that's measured here at the top, when this starts to decline. So even though the market is rising, the strength is getting weaker. The same thing is happening down here. This is the moving average convergence and divergence. So, forget all the geeky speak. Just know that this is negative divergence. The higher value, which happened over here, is doing so with less volume, less relative strength, and with less velocity than it was before. And so the likelihood of that all of a sudden turning on a dime and then creating new highs, I think, is not really good. These are all signs that we see in the past. So as far as what should an investor do from here, I do think that this won't be like, the end of all market conditions. It'll just be a correction. And what will happen is we'll go down, whether it's here or just a little bit lower, before a recovery starts. That recovery, I don't think, will hit this peak. If it ends up being a lower high than the previous high, then this continuation of divergence is in full effect. And if that's the case, when the market does make its turn from wherever it gets to on its next peak, it's likely to go lower than where it turns the corner here, which may happen sometime in the next few days or couple of weeks. So that's what I think will happen. It's not a forecast, not a recommendation, I guess, that you should just go and sell everything. As I said, I think the market will find a base, rally to some degree, and then from there, if it fails to get higher than the previous high, so if we continue to see this pattern of divergence here, that would be a negative. That would be sort of the turning point, perhaps, in a bull market, and likely send the market all the way down to its longer-term resistance, which unfortunately is quite a ways down. It's another 5 or 6% just to the first level, which is this top blue line that you see kind of right there. And if that fails, we could see it go all the way down to the second one, which would wipe out all the gains for the entire year. So obviously we'd prefer that not happen, but that's what we want to be prepared for. Just wanted to give everyone an idea of what I'm watching, and if there's anything really breaking, if this comes to fruition, as I think it may, of course I'll make sure I have an update so all of my clients and blog followers are well prepared. That's it for today. Hope everyone has a good week. May be in touch later this week with my recession probability update. That's a monthly feature that we run every month on the jasonwenk.com blog. So take care. We'll talk soon.